Okay, good morning, everyone. Happy Friday. We're here. It is July 30th, 2021. Ending the month out fairly uneventful, at least right now. We can see for the last week here, if we just dial back to Monday and Friday of last week, it's been very sideways as we attempt to push to new all-time highs. So let's take a look here and see what's going on our ultra-high time frames. We're going to start our pre-market analysis on the S&P 500 futures market. On the quarterly chart, still looking very strong, no signs of exhaustion, and the same exact story on our monthly. When we jump down to our weekly, this is where we have been talking about the potential of a bearish divergence forming up top here, somewhat of an exotic divergence. If we did close here with the same level on RVI, but we did have a push higher in price. Another scenario that I anticipate could potentially happen here is price. Basically, we have today, and then after today's price action, this bar will close. If we stay down over here and maybe even push lower, there's a potential that this RVI will actually close somewhere down here, or maybe even come down as a straight line like that. And in that case, we will have pushed to new all-time highs, but the RVI will have actually pushed to make a lower high, and we'll have a bearish indication on this weekly chart. But we will have to give it for the rest of today and wait until the close to have the actual signal and candle. So we'll have to give it a little bit of time there. On the daily, we did get a bearish indication off of yesterday's candle. So you can see that we did push up to make a new all-time high at 44.2250 yesterday. And the RVI actually did push and make a much lower high. So we did get a bearish indication on our daily chart here off of yesterday's high. And then there is an argument that could be made that right now, although looking at these lows here, maybe I'm not as much in love with it, but you could make somewhat of an argument that we have this lower high back here that has pushed up to the current low, which remember we have all day for this candle to form. So this is similar to the weekly. We really don't want to say much about it. But if you did want to be a little, make some type of argument, you could say that we do have this kind of push to a lower low on RVI and a push to a higher low on the price here. But again, we do have all day for that candle to form. We don't want to make any calls on that right now. But we do have an official bearish divergence off the previous daily high. When we get to our 4-hour, we did get agreement on the all-time or the previous daily high, which is our all-time high at 2250. A really nice bearish divergence on the 4-hour. But you can see that right now we actually have a counter indication off of our overnight low. So the 4-hour is showing a bullish indication off the overnight low. And we'll have to go ahead and jump down to the shorter time frames to really see if we're getting agreement. So the first thing I'm noticing here on our hourly chart is that off of the all-time high, the previous daily high at 2250, we don't really have a bearish indication from the 60-minute perspective. So we do have a clear bearish indication on the daily, but we don't have an agreement with the 60-minute chart. So we'll just have to keep that in mind. Sorry, we do have it on the daily and the 4-hour, but we don't have it on the 60. What we do have is an agreement with the bullish divergence off the overnight low. So the overnight low, let me get the actual number here, looks like 43.7075 has a bull divergence on the 4-hour and the hourly. So we kind of have the two counter indications. And also I do want to reiterate that this week has been a little bit of a mess. So if we go all the way back to, I believe it was July 23rd, was Friday of last week, and we basically have been bouncing around between 43.70 and 44.10 for 6 days now. So it has peaked above that range and peaked below that range by a few points, but overall 43.70 to about 44.10 is the range that we've been in for an entire week, even going into last Friday. So we are kind of expected to have these kind of counter indications in this tight range. And so this morning we're kind of seeing the same situation that we've seen for the last few days, which is that we don't necessarily have a very clear picture until we can break out from the top end or the bottom end of this tight range that we've been in. So let's go down to the intermediate time frames and see if we have agreement with what the higher time frames are telling us. And when we go down to our 30-minute, again, here's this choppy range for the last 4 or 5 days in the market. And up top, we also do not have a bearish indication on the 30-minute. So although we do have 2 of the higher time frames giving a bearish indication and potential for that weekly to also give a bearish indication, I don't see it on the 60-minute. I also don't see it here on the 30-minute. That doesn't mean we're not going to have some type of larger sell-off here, because we do have those higher time frames giving us that indication. But it would be nice if we would have saw the 60-minute and the 30-minute agreeing. That would have given me a lot more faith that we were going to have a larger pullback here in the future. Maybe not today, maybe on Monday. But yeah, we're not seeing the agreement, but we are seeing the bullish agreement off the overnight low. So essentially from the 4-hour all the way down to this 30-minute chart, we are getting bullish indications off of the overnight low right now. And that level, I believe, again, was 30.75. 43.70.75. Hello. And so this morning there seems to be a lot more bullish indications off this overnight low. But remember, we can't be too rigid with what we see. That's what everything is telling us right now. But if that level breaks, then it looks like we're kind of back to a larger pullback situation. So just one other interesting thing to point out here is we have this very strong push through May, through June. In fact, if you go, I think, back into March, which would be on the older contract, just continue to push and push. And you can see that we pushed and made these highs around 43.80 back at mid-July, and then had this strong sell-off. When we recovered and broke through that level, notice that for the last week here, we've basically been bouncing here off of that previous strong resistance point where we pushed to and sold off from, and we've been kind of holding it here. We peaked way through it here on the 27th, and then came back up and then continued to hold that level. And now at the current moment, you can see we peaked below once again, but still the bulls seem to keep jumping in here. So just wanted to point out that we are kind of holding those highs that we made back in mid-July, which is a good thing for the bulls so far. And we want to consider that we have this entire push up from that low. Hopefully you guys remember when we came down to this 42.22, I think it was 42.24 even, which was like a prediction point and a multi-time frame bullish signal down there. This whole leg, if we do pull back, we have these retracement levels. I do think that overall we don't even need to use them in this context, because we have some very obvious swing highs that haven't been really tested back here, including a deeper retracement all the way down into this 42.80 area. And then of course the prediction points are there as well. If we jump down to the 10-minute, the bottom end of the intermediate time frame here, just want to point out that, yeah, the 10-minute did have some agreement of a bearish signal up top off the previous daily high, but it's also showing a lot of the bullish case off of the overnight low as well. So that 43.70.75 is going to be an important level to hold this morning in order for all the bullish indications that we have to follow through.